Yes, people, a very happy afternoon, all of you. So, guys, we're doing this chapter called as Partnership under Revision Series, and today is the third revision class of the fundamentals of partnership. So, guys, in the last class, we have completed our discussion on the four different cases of the P&L appropriation account. So, the target for today is to discuss the concept of the remuneration and then interest on capital. So, I told you I'll be giving you two documents, people. One document is comprising of your list of the concepts and the subconcepts. Correct? This is the list I've shown in the beginning of the 12th itself. So this is basically a list of all the concept that is there chapter wise. So what are the concepts that we have seen so far? So in the first class, we discussed about a few very important points. What is the meaning of partnership? What is definition of partnership? What is liability of partners in the partnership firm? Unlimited, jointly, severally liable. Then we discussed about the features of partnership. Minimum 2 partners, maximum 50. Like that theory we discussed. Then we discussed in the absence of partnership deed, what are the important provisions? So this is that list. So this is purely the list of each and every item. The elaboration is done where? In the note part. The elaboration has been done here. This is just the list. Like that, you have to have the list for all the chapters of all the chapters. Why? Because when you revise in that 6 days of holiday, you might miss out on any concept. So if you have a checklist, once that concept is done, put a tick mark to it. You'll get to know that I've covered all the concepts. And if you want to know the summary of all the concepts, then this note is going to help you. What is the journal entry for interest on loan by partner? What is the journal entry for interest on loan to partner? So this is the concise concept. So what have we completed so far? So we completed the theory part. We completed the assumptions in the absence of partnership deed. We understood the entries for interest on loan by partner. We understood the concept and entries for interest on loan to partner. We understood the concept and the entries for rent payable to partner. We have discussed the 4 different cases of P&L appropriation account. So this 5 is concept. Under that, we have 4 sub-concept. Then we discussed what are the 2 different methods of maintaining capital. If the question is silent, what are we supposed to do? Whether fixed or fluctuating, that also we discussed. Am I loud and clear?
Yes, sir.
Today we'll be heading forward to discuss the concept of manager's commission. Now, the partners in a partnership firm, apart from getting the profit sharing ratio, they also get the salary or commission. Both of these put together is called as remuneration. Why? For the extra hard work that they're doing. Profit sharing ratio is the profit to be given for the risk of doing the business. For the risk of doing that business, the profit sharing ratio has been given. But out of the 3 partners, A, B, C, B and C are sleeping at home, doing nothing, but A is doing all the work. So for the extra work what he's been doing, for that he has to be rewarded, no boss. So that rewarding could be in form of either salary or commission. Salary, no problem. Every partnership deed says that, okay, I'll pay you 10,000 salary per month. I'll pay you 50,000 salary per month. I'll pay 1 lakh salary per month. So in salary cases, you have no problem because the absolute amount has been defined in the partnership deed. The problem comes in the commission part. Commission, they will never give you as an absolute amount. They will always give you in form of percentage. And this percentage will be linked either to the turnover of the business or the profitability of the business. The commission percentage of a partner will be linked to the turnover of the business or to the profit. Why? Because we're trying to attract the partner to do more hard work. What will we say? Whatever is the turnover of the business, no, I'll give you 10% of that as commission. So if my turnover is 10 lakh, what is 10% of 10 lakh? 1 lakh.
1 lakh.
He'll get 1 lakh commission. And now he knows that if the turnover increases, my commission also will increase. So naturally, what will he try to do? Improve the performance of the business. So what are we trying to do? We're trying to link the commission to the turnover. So more turnover, more commission. More turnover, more commission. So all the 7 days in a week, you will sit and work hard. You will think ways and means how to do the business to increase the turnover. Sometimes the firm does not link this commission to the turnover. They will link to the net profit. More net profit, more commission. Less net profit, less commission. So more net profit means more business, more income, less expense. automatically the efficiency of the business has been pulled. That is the strategy behind giving the commission as a percentage. So now in your syllabus, what they have done, they have not linked the commission to the turnover because the calculation is very easy. Turnover, you know, in the business, multiply the commission percentage, you get the commission amount. But they don't want to make your life easy, boss. Here. Huh? They don't want to make your life easy. What they want to do, they want to make it more complicated. So what have they done? They have linked this commission to the net profit. Before charging commission, after charging commission, they link the commission to the net profit. Now the problem where it is arising, you know, the problem comes when the people by heart the formula. Sir, if the question says that calculate percentage of profit before charging commission, then this is the formula, sir. Net profit into rate of commission by 100. Let's say the commission rate is 10%. So net profit into 10 by 100. But if the word after charging commission is given, sir, then what will I do? Net profit into 10 by 110. So how did you decide the formula? Based on the word before and after. In my regular class, I told you, and I proved one point, which I'll do it again today. If you are relying on the word before and after, you will not be just screwed, you'll be royally screwed. Hence, to prove that point, we'll do the question number 17, which says that XYZ are partners in a firm. X is to get a commission of 10%. So X is given commission. Why? Because you want to improve the performance of X. You want X to give more time to the business. You want him to work more hard. So he works more hard to the business, the profit of the business will increase. So whatever the profit increases or whatever the profit of the business is, 10% of that we are going to give him as a commission. We're going to give 10% of the net profit as commission. Now the question that arises is that 10% of which net profit? There are multiple net profit. Sir, what are you talking, sir? Yeah. If you see the P&L appropriation account, the profit that comes from P&L, this is net profit. From this P&L, let's suppose you're minusing salary from the P&L profit, from the net profit, if you minus salary, you get one more profit. From this again, commission has to be given, IOC has to be given, then profit needs to be distributed. So multiple stages are there. So from this net profit, if you minus salary and get this net profit, this is also called as net profit. But this is called as net profit after salary. From this, let's suppose I'm deducting general reserve value. I'm getting one net profit. So this is net profit which is coming after salary, after reserve, but before distribution. So like that, from every net profit you minus the amount, no? The subsequent amount what I get after minusing is also called as net profit. So on which net profit I should multiply 10%? That question will very clearly tell you. Here the question is telling is X is to get a commission of 10%. 10% on what? Net profit. Which net profit? That net profit which is coming before charging. Charging means what? Before minusing commission. Before debiting commission. In this question, luckily, there is no sale. There is no IOC. There is no IOD. Nothing. Only commission item. So what is that net profit which is coming before minusing commission? So that net profit which is coming from P&L. In the entire P&L appropriation, only one item, commission. So before minusing that commission, if I want the net profit, what that net profit could be? That profit which is coming from P&L. Why is to get a commission of 10%? Why is to get a commission of 10%? 10% on what? Net profit. Is it the same net profit as we are calculating for X? No. Here the meaning is changed. So that net profit which is coming after charging all the commission. While Z is to get a commission of 3% of net sale. Now, if you look at the beauty here, X and Y's commission is linked to the profitability. And Z's commission is linked to the turnover, sales. Net profit for the year ended 31st March 24 was 55,000. Net profit for the year ended 31st March 24 was 55,000. And net sale was 5 lakh rupees. Net sale is 5 lakh rupees. Determine the commission of X, Y, and Z. Also show the distribution of profit. Now, out of X, Y, Z, whose commission easily calculatable without any problem? X and Z, both. Z very easy because whatever the net sale is on that 3%. Z is to get a commission of 3% on net sale. So what is the net sale? 5 lakh into 3%. How much? 15,000.
15,000.
So Z's commission 15,000. Any problem?
No, sir.
3% is the commission. What is the meaning of 3%? 3% means 3 by 100. So 3 rupees is commission for every 100 rupee of net sales. 3% means what? 3 by 100. What is the meaning of 3 by 100? 3 rupees is commission for every 100 rupees of net sales. So when my net sale is 100 rupees, what is my commission? 3 rupees. Therefore, now my net sale is how much? Actual net sales is how much? 5 lakh. So
5
now when
lakh.
my net sales is 5 lakh, what is the proportionate? What is the proportionate commission? Cross multiply. 5 lakh into 3 by 100. That is how this formula of 5 lakh into 3 by 100 came. We by heart had no. Sir, net sales given, 3% given, multiply. But what is the meaning of this multiplication? Nobody knows. Your majority of the formula is derived using this vegetable vendor technique only, which in mathematics we call it as unitary method or proportion method. Correct, no? Pure mathematics it is. Any problem? So like that we got Z's commission how much?
15,000.
15,000 rupees. Any problem?
No, sir.
Now, let's talk about X's commission. There's a mistake in this question, which I told you in the regular class also. So made a note, I'll ask you. Others, I'll repeat one more time today. What mistake they have done in this question?
They're charging after all commission. It should be X and Y's commission.
Yes. Okay. Very good. They which we have made a note of that point earlier. Good. Now, Y's commission, language what is given in textbook versus the answer what they've done in the solution, both are wrong. This question is been twisted only in the current year. If you take the previous year textbook, the same question was there, but there is no information about the Z's commission. I'm talking about the previous year textbook, your senior's textbook. I have a previous year question there. They did not have this at all. The question was only this much. From here till here, determine the commission of X and Y, show the distribution of profit. Now, if this was the question without Z's question, without the Z's commission, whatever answer they worked out is right. But when the question is twisted, what are they supposed to do? Answer also they have to twist, but they forgot to twist the answer. I'll tell you what needs to be done. Y's commission, sorry, X's commission first. X's commission. X's commission done? No. X's commission is equal to how much? What is X's commission percentage?
10%.
10%. 10% on what?
Net profit.
Net profit. Which net profit? That net
Before
profit is coming before charging commission. Means from whatever the net profit is coming from the P&L, please do not deduct the commission. Without deducting the commission, I have taken. So before deducting the commission, what is my net profit? Net profit for the year is how much? 55,000. From this only commission to minus? No. And after minusing the commission, whatever the profit comes, that becomes your net divisible profit, and that only you distribute. So please tell me, what could be my net profit before minusing commission? 55,000. Before minusing commission. Here in the item of appropriation, which item is there? Only commission. There is no salary. There is no IOC. There is no IOD. So what am I going to charge if at all I charge? Only commission. So if I don't charge commission, what is the net profit? 55,000. So 10% on the net profit. Which net profit? Before charging commission. 10% on what is the net profit before charging commission? 55,000. So what is 55,000 ka 10%? 5,500. So X's commission is 5,500. Any problem?
No, sir.
So what is the formula? Sir, 55,000 into 10 by 100.
100.
What is this 55,000? Net profit before charging commission into rate of commission divided by 100. Formula. Net profit before commission into rate of commission divided by 100. So word before means this formula you by hearted, no? Like that, how many people by hearted? Tell me. Others? 2, 3, 4. That's all. By hearted. Conceptually clear. I'll ask the conceptual clear. I mean, I will ask that question based on that concept. Okay. Now, let's do Y first. Then we'll come and twist this question. Y is to get a commission of 10% on what? Net profit. Which net profit? After charging all commission. This all, cut it down. After charging X and Y commission, like that you put it. Because all here means what? They are telling from the net profit minus X's commission, Y's commission, Z's commission, all of them you minus and do the calculation is what the question saying. But answer, they have not done it that way. Answer, how they have done it? They have done only after charging X and Y's commission. I'll prove it to that also. To change the question for a second. Y is to get a commission of 10% on net profit after charging X and Y's commission. The question is changed. Please change the question. Don't put the word all, because the solution they have not done for all. The solution they have done only for X and Y's commission to be deducted. So now, Y's commission. Y's commission is equal to how much percentage, people? How much percentage?
10%.
10%. 10% on what? On net profit. Which net profit? So that net profit which is coming after minusing X's commission, after minusing Y's commission. So whatever is the net profit, from that if I minus X commission, I'll minus Y's commission, I'll get one profit. On that net profit only, Suguna, you're supposed to calculate 10%. Not a big deal. How do we do it? Sir, I'll do one tabular column. I'll do it, everything. Everything. Forget Z for shh. I'm the teacher. I'll explain. Please tell me, net profit before charging commission is how much?
55,000.
Any problem? Any objection in this?
No, sir.
55,000. Okay. Now, from this I'm minusing X's commission, people. From this I'm minusing X's commission. How much? 5,500. How much should I get?
49,500.
49,500. This 49,500 is also net profit. Yes. So this is net profit after X commission, but before Y's commission. Forget Z for a moment, because in this entire calculation I've ignored Z. For Y's calculation we have ignored Z. Now, from this if I minus Y's commission, which I don't know what amount it is, I will get one profit. What is this amount called as? So net profit. This also is called net profit. But this is net profit after X and Y's commission. Z commission not deducted. Z commission not deducted. From this I made to minus the Z's commission. Clear? So which means if I go with the question which we have changed the question. What we have changed? Y is to get a commission of 10% on net profit after charging X and Y's commission. I've changed the question. So now this is the net profit which is coming after charging X and Y's commission. If this amount is known to you, directly multiply 10% and get the answer. Correct? No? If I have this amount, I'll multiply 10% of that, I'll get going with the answer. But the problem is I don't have this amount. I don't have this amount. So now how do we calculate? Always assume this final answer will be equal to 100%.
100.
This money is 100% belonging to the next set of people. So whatever adjustment I'm going to do, this belongs to subsequent people. Whatever continuation of the P&L we do after this, it is 100% belonging to the next set of people. So this will always be equal to 100%. Y's commission is how much? As per the question.
10%.
10%. Now guys, with what value? If I minus 10%, I'll get 100.
110.
110%. Any problem?
No, sir.
So now I've drawn three columns here. One is particulars column. Second is amount column. And third is percentage column. Any problem? In the percentage column, we are telling that this 49,500 belonging to two people. In that 10% is belonging to the vice commission and remaining 100% for the remaining people. So this 49,500 is equal to how much percentage? 110%. From this 10% commission, if I minus, I'll get the 100% ka value. Now apply the vegetable vendor technique. If 49,500 is equal to 110%, Then for 10 percentage, how much? Cross multiply. If you cross multiply, it is 49,500 into 10 by
110.
10. Any problem?
No, sir.
What is this 49,500? As per your so-called formula. As per your formula. Net profit before commission. Whose commission? Vice commission. 49,500 is net profit before vice commission. Into rate of commission 10. Into 10. Divided by rate plus rate of commission. 100 plus rate of commission. What is 100 plus rate of commission? 100 plus 10, which is 110. So 49,500 into 10 by 110. Same formula you got it. Any problem?
No, sir.
All in people. Any problem?
No, sir.
No, sir.
No.
You can answer what they've done. From this 55,000, they subtracted 5,500. What will you get? What will you get? Tanushree, what will you get? 55,000 minus 5,500. What will you get? Amount 40,500. And then what they have done? Multiplied by 10 divided by 110. So what answer are they getting? 4,500. Are we getting 4,500?
Yes, sir.
Are we getting 4,500? Yes.
Yes, sir.
You got the commission now? Can you
Yes,
substitute the commission here? How much? 4,500. If I minus 4,500, what am I getting as a net profit after minusing X and Y's both commission? 45,000. So can we check the answer what we got here is right or wrong? Yes, sir. How? Sir, the question says that Y will get a commission of 10% on net profit. Which net profit? After minusing both X and Y's commission. So after minusing both X and Y's commission, what is my profit? 45,000. On that 10% should be 4,500. Exactly matching. The question said what? Initially, calculate Y commission 10% after charging all the commission. Means I should have minus here. Which commission also? Z's commission also I should have minus. If I go literally with the language of the question. Net profit before commission, how much? 55,000. If I literally go with the language of the question. If I literally go with the language of the question, means what? Y is to get a commission of 10% on net profit after charging all the commission. All commission is whose commission? X commission, Y commission, Z commission. So, minus X's commission. How much? 4,500. How much is Z's commission? How much is Z's commission? How much is Z's commission? 5 lakh into 3%. 15,000. What is it? 55,000 minus 4,500 minus 15,000. How much? 34,500. So this is net profit before Y's commission. Means from this I have subtracted commission of X and Z. X commission is 5,500. Sorry. So this is 5,500 it seems. X is 5,500. So 55,000 minus 5,500 minus 15,000 is how much? 55,000 minus 15,000 is how much? 40,000. 40,000 minus 5,000 is 35,000. Minus 500 is 34,500. I don't know how you got the right answer with the wrong amount, but anyways. So net profit before Y's commission is 34,500. From this, what am I yet to deduct? Sir, Y's commission.
Vice commission.
I'm supposed to deduct Y's commission. So minus Y's commission. If I minus Y's commission, people, I'll get one amount. This amount is called as net profit after all commissions. Do you agree with me? If this amount is available to me in the question, on then I'll multiply 10% and get Y's commission directly. But unfortunately, to calculate this value, I'm dependent on Y's commission. And to calculate Y's commission, I'm dependent on this value. So we are stuck in a vicious circle. Whenever you're stuck in a vicious circle, you have to use the formula 10 by 110. Rate by 100 plus rate. So now, please tell me, what will we do here? I'm going with the literal answer of the question. The answer what they've given, the answer what they've calculated 4,500 is for that question where they say calculate Y's commission 10% after minusing X and Y's commission only. Now I'm giving you a solution which is a different solution, which is the requirement of the given question. They're telling to minus all the commission. If this was the line given in the exam, then how are you supposed to do is what I'm going to discuss. So now this amount will always be equal to
100.
100%. If this is equal to 100%, then vice commission, how much is given in the question?
10%.
With what amount, if I minus 10%, I'll get this 100?
110%.
110. Same logic. 34,500 is equal to 110. If 34,500 is equal to 110, then for 10, how much? Cross multiply. You can use your calculator. 34,500 into 10 by 110. Into 10 by 110. Because this 34,500 is net profit before charging vice commission. So into rate by 100 by rate. 100 plus rate, sorry. Into rate by 100 plus rate. Into 10 by 10 plus 100, which is 110. How much? 34,500 into 10 by 110. You can use your calculator. 3136. 3136 is the commission. So here, if you go with the literal question, if you go with the true question, then the question answer should be not 4,500. It should be 3136. 3136. Yes, are you able to follow? But what they have done, the answer is something else. The question is something else. If you want to go with the answer, what they have done, then here it should be after charging X and Y's commission only. So are you clear with how did we calculate the commission for X?
Yes, sir.
As long as X and Z is concerned, we had to calculate the percentage, no? The percentage on what value I should calculate, that value was very clearly given in the question. X commission on 55,000. 55,000 directly given in question. So 55,000 to 10 by 100, game over. Z's commission, 3% on 5 lakh. That also clearly given in the question. But for Y's calculation, the amount on which I'm supposed to calculate this 10%, this was missing. To calculate Y's commission, I was dependent on that profitability. And to get the profitability, I was dependent on Y's commission. So whenever you're stuck in the vicious circle, you're supposed to use the formula 10 by 110. If the commission rate was 3%, 3 by 103. The commission percentage was 5%, 5 by 105. If the commission percentage was 15%, 15 by 115. Am I clear? All in people, am I loud and clear?
Yes, sir.
Now, for all those people who are bad at this formula, I'm going to twist the question. Before commission, what formula? Whatever the net profit is into 10 by 100.
100.
After commission means afterward, whenever afterward comes, what is the formula? Net profit into 10 by 110. So this is before formula, this is after formula. Okay? For those people who are bad at the formula using the word before and after, for you this question is. Y's commission is 10% on net profit after charging, after charging X's commission. Y's commission is 10% on net profit after charging X's commission. The word is after. Please tell me which formula will you use? Which formula? Formula 1 or formula 2?
Formula 1.
How will you use formula 1? The word before comes only, you have to use formula 1, no?
If it is after Y's commission, then the formula 2 will be used.
What, ma? Look at the name here. Percentage of net profit or distributed profit after charging commission. In the formula where they said X is commission, Y is commission. Common sense. I see. It's okay. Can you please elaborate your common sense?
After charging commission, obviously my personal commission.
At least she's attempting, no? Why are you distracting her?
And here they said after excess commission. So that means they didn't say after vice commission, which basically implies that.
Others, yeah. What did your school teacher say? Before means this formula, after means that formula. Be honest. Yes or no? After is there. After formula use it. No. Why are you using before formula? Then what did your school teacher say? She didn't say anything. Topic was taken in school. High chance of this question coming in board exam. Very much. Now, very simple. What is my net profit? 55,000. Do you know what is X's commission?
Yes.
Yes. So minus X's commission, which is
5,000.
5,500. What am I getting?
49,500.
49,500. What is this 49,500?
Net profit
Net
after
profit after X commission, but before Y.
Vice commission.
What is the question saying? Give commission to Y. How much percentage? 10%. On what? Net profit. Which net profit? After X commission. This amount is readily available to me or not? If it is available, then directly into 10 by 100. So you cannot literally go with the word before and after. You have to see whether the amount on which I'm supposed to multiply the percentage, is this amount readily available or not. If it is available, directly to 10 by 100. If not, you have to extract the answer. How extraction is done, I'll tell you. So 49,500 10 by 100. So what is the commission amount of Y? 49,50. That is 4,950 is the Y's commission. Now, what is the process of extraction? This is what you've done here, no? This 34,500 into 10 by 110. So this 34,500 into 10 by 110 means what? This 34,500 10 by 110 means that this 34,500 is an amount belonging to two people. In that 10% commission belongs to Y, and 100% profit belongs to the partners for distributing the profits. So this 34,500 is belonging to two people. In that, one person is going to enjoy 10% amount, other person is going to enjoy 100% amount. So 10% plus 100% put together, how much it is? 110.
110.
So 34,500 divided by 110 means this 34,500 is broke down into 110 parts. Into 10 if you do, I get 10 ka part. So this 34,500 is not equal to 100%. This is equal to 110%. Whereas in this question, this 49,500 was equal to how much percentage? This was equal to 100% here. Then for 10%, how much cross multiply? 49,500 into 10 divided by 100. Because whatever this 100% amount was there, in that straight away 10% of this is going to the person Y. So whenever the amount is readily available to you, on that, just remember to calculate the 10 by 100 directly. Apply the commission percentage directly. When I should do 10 by 110 or 5 by 105 or 15 by 115, only when the amount on which I'm supposed to multiply the 10% or 15% is not available, that time I have to do 10 by 110, 15 by 115, etc., etc., etc. So don't go by the word before and after. Understand the question, what profit is given. If profit is directly available, multiply with the commission percentage. If not, into commission divided by commission plus 100%. Am I loud and clear?
Yes, sir.
In this, if you have any doubts, please ask me. Now you change the question here. It is not after charging all commission. It is after charging X and Y's commission only. So like that, I got X commission 5,500 and Y's commission is how much? 4,500. And how much is Z's commission? 15,000.
15,000.
From 55,000 rupees, if I minus all this three commission, what is my net distributable profit? 30,000. What will I do with this? Distribute in the profit sharing ratio. Profit sharing ratio is given?
No,
Not
sir.
given. In the absence of partnership deal or in the absence of the profit sharing ratio, it has to be distributed equally.
Equally.
Any problem?
No, sir.
No, sir.
So here in the note, make a change. The above stated amount of Y's commission can be verified. How? After charging all commission 9, X and Y's commission. Net profit comes out to be 45,000. That is, from the net profit, if I minus X's commission, minus Y's commission, what is the net profit coming out to be? 45,000. Now this amount is readily available. On that, 10%. 10% of 45,000 is how much? 4,500. So what they've done is, question they have changed. Answer they have copy pasted from the last textbook as it is, without applying the mind. Oh, sir, you're such a big person that you identify fault in the system, in the book. Ipa, common sense, pa. You look at the language, what they have done. Look at this. After charging all commission, they're telling. All commission means whose commission? X, Y, Z. Donkey fellow, what they have done? X commission, Y commission only deducted. Where is Z's commission? If Z's commission is not deducted, how it became all commission? Think, no. In exam, you will not get all this nonsense question. You will get a proper question. Now, all those people are by hearting Or if this situation comes, I'll do this formula. If that situation comes, I'll do this formula. I'm sorry, you'll be screwed. Not just screwed. No. Biating is not the solution. Why are you doing kustifying with that remote? Palm, leave him now. Biating a question of this sort is not going to be of any use. Because if I start twisting this question, no, Y's commission is so much, X commission is so much. I have 10 different ways to twist this. Y's commission 10% after minusing Y's salary, but before minusing X's commission. After minusing Y's salary, X commission, but before minusing Y's commission. Like that, there's no end to it. I can keep on twisting and twisting and twisting. So you have to understand the language of the question. You have to be an expert in English language. Expert means not that expert. At least English language you should be properly able to interpret. That second, you should have a common sense. If these both are combined, you can easily crack this equation. You can easily crack the equation. Any doubts here?
No, sir.
Did you come across in any scanner question, book bag exercise question, your past board papers, sample paper, anywhere a question which is way twisted than this? Shh. You come across? Sir, for that we have to work out, no, sir. We didn't work out only now, no. When will we work out? When the board exam is coming, the 60 holidays, and so why do you think that holiday is given? It didn't work out that time only, sir. Wonderful. Great. So commission part is clear.
Yes, sir.
Please go through 18th question and tell me if you're able to do it or not. Fast. It's a unique question, different one. Do it fast. What is missing here? Net profit is missing. Is it missing in such a way that we cannot even calculate the net profit? Or we can calculate? We can calculate? Okay. Pawan Parul are partners in a firm. As per the partnership deed, Pawan is to get a salary of 30,000 per month. Pawan will get a salary of 30,000 per month. In a year, how many months? 12 months. Multiply by 12, how much? 360. How this question will be twisted, you know? They'll tell you, Pawan and Parul started the firm on 1st October. As per the partnership deed, Pawan is to get a salary of 30,000 per month. What will you do and come in the exam? 30,000 into 12 you'll do and come. But what are you supposed to do? Right, because the business was started when? October. So the partner will start withdrawing the salary from when? October, na? So October end. November, December, Jan, Feb, March. So 30,000 into 6. Every single line you read, you have to be very vigilant. Anyhow, the question could be twisted. Okay. So here, luckily, this is a ongoing business. So 30,000 per month means for 12 months, it is 3,60,000 rupees. And he is to get a commission of 10% on net profit before charging any commission. Means I should not deduct any commission. Without that, I should record my net profit, and on that 10%. The doubt what people have here is that, sir, salary should I minus or not? Parul is to get a salary of 50,000 per annum. PA stands for per annum. So what people will do income? So 30,000 if I multiply by 12, 360 it is coming. 50,000 also multiply by 12. Because where is 360 and where is 50,000? Per annum means what? They've already multiplied with the 12 months and they've given the final salary value. And the commission for Parul is 8% of net profit after charging all the commissions. Which commission? Pawan commission and Parul commission. Both you have to minus. You'll get one amount. On that, 8%. But that amount is not known. If that amount is not known, into 8 by 108.
108.
So profit after partner salary, but before commission is 550. Means what? This 550 is not the final profit that is coming from your P&L account. They have done a cheating with you. Whatever the net profit came from P&L, no. What they did? They deducted the salary. They subtracted the salary and then they gave you this 550. This 550 is coming after deducting the salary. This is not the final net profit. So now, this 5,50,000 is there now. How did you get this? So the net profit which is coming from the P&L, from that the salary is being Deducted. Sir, how do you know salary is deducted? Donkey fellow. They are telling no. This is the profit after partner salary. After means what? After deducting partner salary, but before deducting commission. So 550 is equal to net profit minus salary. This equation makes sense or not?
Yes, sir.
English language plus common sense. Little bit of flavoring accounting links. Accounting concept. Now tell me, 5,50,000 is equal to net profit X. Salary, you know or not?
Yes, sir.
Sir, salary is 30,000 per month for Pavan.
7.
Plus for Parul, how much?
50,000.
50,000. So how much it becomes? 360 plus 50,000. I'm putting 360 here. It's okay, no? 360 plus 50. So how much total it becomes?
4,10,000.
4,10,000. So 5,50,000 is equal to X minus 4,10,000. Take this minus 410 to other side. So 5,50,000 minus 410 it comes to other side becomes plus
Plus
410. So plus 4,10,000. So what is my X?
960.
9,60,000. This is the net profit that is coming from the P&L account. What is X here? The net profit that is coming from P&L. From that, smartly they have deducted the salary and given. Understood? Not understood.
Understood, sir.
Now, commission for Pawan is 10% on what? On what?
Net
Profit. Which net profit?
before commission.
Before charging commission, before minusing commission. Now the question is, sir, should be minus salary or not? You will not minus salary unless the question says you to specifically minus the salary. Why should you minus the salary? Sir, I'm recording salary first. No, sir. Donkey fellow. You are recording salary first and record commission first. Have they given in the appropriation account the format that salary will come first and then only commission? Then IOC. There's no format as such. Here when they say that commission is 10% on net profit before charging any commission means commission alone should not be deducted. Salary, forget it. No need to bring salary into picture at all. If the question had they told you, I want commission 10% on net profit before charging commission, but after charging salary, then the profit which comes after minusing salary, which is 5,50,000, on that 10% you would have calculated. Had they told you 10% commission on net profit after salary, but before commission, on this 550 you would have multiplied 10%. But what is the language that they've used? They've used the word 10% commission on the net profit before charging commission. Salary, nothing is being informed. So means you will not minus salary. You will not minus salary. So please tell me, what is the profit that is coming before minusing commission?
9,60,000.
9,60,000 rupees. Before minus commission means salary also not need to minus. Salary also not required to minus. So if I don't minus any of the salary and commission, what is my actual profit then? 960. On that 10%. If the profit is readily available, on that you will multiply 10 by 100. So 9,60,000 to 10 by 100 is how much?
96,000.
96,000. Am I clear? The question is silent about whether the salary should be deducted or not. The question is silent. You will not minus salary. Okay, sir. Next. What is next? Parul's commission is 8% on net profit. Which net profit? After charging all commission. Did they say after charging all commission and salary? You said only minusing commission. So now how do I calculate? So net profit before commission. How much?
9,60,000.
960. Minus who is the first partner?
Pavan.
Pavan. How much is his commission? 96,000. If I minus, what do I get? 8 lakh? 960 minus 96 is how much? 8,64,000. So this is net profit after Pavan's commission, but before Parul's commission. Minus Parul commission. How much it is? So we don't know, sir. Because whatever commission we minus, and after this value comes, on that I'm supposed to multiply that 8%. So this is dependent on this, and this is dependent on this. So you're stuck in a vicious circle. This is net profit after charging all commission. Means after deducting all commission, which is not known. So this is equal to how much percentage?
100.
100%. This is equal to how much percentage? 8.
8%.
With what if I minus 8, I'll get 100.
108.
So with 108, if I minus 8, I get 100. So this 8,64,000 is equal to how much percentage?
108.
And for 8, how much percentage? For 8%, how much is the value? Cross multiply. 8,64,000 into 8 by 108. How much? 64,000. From this 864, you're picking out 64,000. You're snatching out 64,000. 64,000, if I snatch out, what is the remaining amount? 8 lakh rupees. So this is that profit which is coming after all the commission. So on that, if you multiply 8%, what are you supposed to get? Same 64,000. So like that, you can cross check also. On 8 lakh, if 8 lakh was directly given in question, no need to do this drama. If 8 lakh, guys, directly, if they given the question, let's say they give you the same question, full big question. In the question, they'll give you 8 lakh rupees, which is net profit after all commission. They'll give the entire question with that additional line. And they'll give you 4 options, A, B, C, D. One will be 8 lakh into 8 by 100. One will be 8 lakh into 8 by 108. One will be 5,50,000 into 8 by 108. One will be 9,60,000 into 8 by 108. So like that, 4 different answers is given. Which answer will you opt?
First.
8 lakh into 8 by 100. When the amount is directly given into 8 by 100, game over. So those who are clear with the concept, this MCQ, how long will it take to solve? The concept is clear. Same question given. With that, they're given 8 lakh is the net profit after all commission. What are you required to calculate? Par rules commission. To solve this answer, how long do you need if you're clear with the concept? Very simple. 8 lakh into 8%. How much time you need to multiply this? No. That much time enough to get the answer. Because 8 lakh into 8%, 64,000 is answer. So how much fast you're in the mental calculation, that much fast you can finish this answer. So this is a 10-second question. At the max, 15 seconds. 10 seconds for reading the question, 5 seconds for answering it. But how long will you take? You'll sit and calculate in rough column. Such a big question they've asked. You'll all put the side calculations. How much time wasted? 4 minutes gone. For 1 mark question, 4 minutes gone. For 1 mark question in exam, how much time can you maximum spend? 2.25 minutes per mark you can spend. क्या बोला उसने? No. You have to do the calculation. No. Your board exam is for how many marks? 80 marks. How much totally minutes? 3 hours means 180 minutes. So 180 minute divided by 80 mark. How much you will get? 2.25 minute per mark. So for 1 mark question, maximum time you have to spend is 2.25 minutes. For a 4 mark question, how much time will you spend? Into 4. How much? 9 minutes. Now there are some 4 mark questions which you definitely cannot finish in 9 minutes. It will be lengthy, boss. You'll take 10 minutes, 15 minutes also. You need extra time. How will you get extra time in the 3 years board examination? Not possible. So in some question, you have to save time. So now in this question, which you can complete in 15 seconds, how much time you took? 4 minutes. Gone. Had you completed this in 15 seconds, the extra time is there, no? Or forget even 15 seconds, 25 seconds. 2 minutes you would have saved. Like that in 10 questions, if you save 2 minutes, 20 minutes you can save, which can be used for the lengthy questions. Time management. So all these people who are sitting and by hearting all the questions, rest in peace. I mean, with the board exam. Because we are not able to instantly get the answer in mind, concept in mind. We'll end up thinking a lot in the exam. You'll be wasting the time. Gone. So all of you come and complain, no, sir, paper very lengthy, sir. Could not complete the paper on time. Paper is not lengthy. Lazy goose, you have not done the adequate practice at home with the timer. Concept is not clear. Practice not done. With the format not done. Hence, you took extra time in the exam. Paper could not be completed. How many of you have that complaint? So I'm not able to complete the paper on time. You know what is the mistake that you're doing? Conceptual clarity is the key word. Now, the next concept is interest on partner's capital. Who is giving capital to whom? Who is giving capital to whom? Partner
Partner.
is giving capital to the firm. 10 lakh given. Why? Shh. Why are you talking all of it? In return, firm is supposed to pay
Interest.
interest on capital. The question is, why is the firm supposed to pay interest? Why interest? Why interest? Shakti, why interest? You want to switch off the AC? Switch it off now. What temperature you want to set? 26, 30, 35. Have the AC off பண்ணிடலாம். Switch off, no problem. This will not be switched off. Those who don't want AC have to go to the balcony. Now, why is the firm supposed to pay interest on capital to the partner? Okay, one point accepted. Two differences are there. Two purposes. One purpose he said. Okay, you still have to more elaborate. If interest on capital is not there, what will happen? Dishum. Okay, agreed. If interest on capital firm does not pay to the partner, there will be dishum. Who will do dishum? Two reasons why interest on capital to be paid by the firm is justified. One, if the owner is not giving this 10 lakh to the firm here, if he's investing his money elsewhere in the share market or fixed deposit, is getting some fixed income return. By investing this money here, he's losing that opportunity. So you will tell, so for that only the business is giving the profit. Profit is not for the money, boss. Profit is for doing that risky business. For the risk, the profit has been given. One reason to justify why the firm should pay the interest. If you don't pay the interest to the partner will not have any excitement to contribute the capital to the business. He will not get the money required for the business. Second reason, the three partners A, B, C. A contributed 15 lakh, B contributed 10 lakh, C contributed 5 lakh. Profit sharing ratio equal. How much? Equal. Let's say the actual profit of the business is 15 lakh rupees. Each one of them will get how much profit? Multiply. This is profit sharing ratio. This is capital contribution. This is net profit. That is divisible net profit. Please tell me, what is the profit when I distribute?
5 lakh.
5 lakh, 5 lakh, 5 lakh. Out of these three, who's the most happiest person? Who's the most happiest person?
C.
Are you sure? Can you please explain why C is happiest person? He gave lady only 5 lakh. He gave only 5 lakh. How much money he made? Full 5 lakh. So whatever money invested, full money he got at the end of the year. Who's the second most happiest person? B. 10 lakh he gave. In that, how much he got back? 5 lakh. How much he said to get back? 5. So compared to A, B is happy. But when I compare B with C, B is unhappy. Because C's got full 5 lakh money back. A invested 15 lakh, only got 5 lakh. If this continues, all the three will end up fighting. And the business will entirely collapse. Profit percentage is for the risk that they're taking. If you work extra hard, you get salary commission. If the capital contribution is done in different manner, if it is different amount, then it is always advisable to have interest on capital separately. Now imagine had the capital contribution been 5 lakh, 5 lakh, 5 lakh. If there is no IOC, no problem. Because profit sharing ratio is same. Everybody will end up getting the same amount, same capital contributed, same amount, no problem. But when the capital is different, IOC is 100% recommended, failing which there could be a fighting among all the three partners. Hence the concept of interest on capital is proposed. Understood? Two reasons why the interest on capital is coming into picture. Understood? Now,
Yes, sir.
who is paying interest to whom?
On to the partner.
So please tell me, what is the journal entry for the interest on capital expense due? Interest on capital account debit, because this is expense for the business. If you have the profit, you give IOC. So this IOC for you is expenditure, no? To
Partners capital.
anything that has happening between the business and the partner, the give and take thing should always be routed through their capital or
Current account.
So this will go to partners capital account or partners current account. IOC is a nominal account. It has to be closed by transferring to
P&L appropriation.
P&L appropriation account. P&L appropriation account. So what is the closing entry?
P&L
Sir,
appropriation.
IOC is currently in debit. To close, I have to give a credit. So
Credit.
to IOC. And where am I shifting this to? P&L appropriation account. That is why in the appropriation account, you see two interest on capital. So it is because of this closing entry. Any problem?
No, sir.
Journal entry for interest on capital due, interest on capital to partners capital, and P&L appropriation to interest on capital. Sir, the question says calculate IOC 10%. But the question is not telling whether this IOC is an item of appropriation or should I treat this as a charge against profit. The question is silent. What I should do?
Item of appropriation.
Always treat it as item of appropriation. Whenever the question is silent about the nature of IOC, that is whether it is an item of appropriation or whether it is an item of charge against profit, you don't know. Always assume it to be an item of appropriation. If you assume this as item of appropriation, this goes to your P&L appropriation account. Treat IOC as an item of charge against profit when? Only when the question states it specifically to treat as charge against profit. What is charge against profit? You discussed this already in the last class. Compulsory record IOC. When you record IOC, if the profit is getting reduced or the profit is getting converted to loss, you're not bothered. Which means in this case, when you treat IOC as a charge against profit, you're treating the partner as a third
party.
You have to treat a third partner as a third party. Am I clear? So like
Yes, sir.
how IOC could be a charge against profit, salary remuneration also could be treated as charge against profit. But when will you treat this as charge against profit? Only when the question specifically states you. Otherwise, it is assumed to have been an item of appropriation. Is this understood?
Yes, sir.
Now comes the calculation of the interest on capital. Interest on capital, the percentage is there, no? You'll multiply on which capital? Opening capital or closing capital?
Opening capital.
Think and answer.
Okay.
No, I will not agree. Think and answer. You're not thinking properly. Everybody, wait, I'll ask. From last. Kana from you. Interest on capital on opening or closing capital? Opening. Okay. Opening. All of you opening. Here. Anybody says closing? सोच रहा है गैम्बल खेलो कि नहीं खेलो करके फटाफट opening online people
Opening capital.
Opening capital.
I not on closing capital. Imagine a scenario had the law said you calculate interest on the closing capital. You know, as a firm, how will I play? Imagine here, from X, I took a capital of 10 lakh rupees. Okay. When? On 1 April. What did I smartly do, you know? One day before the year end. 30 March. I said, X, we have a lot of money. Okay. This 10 lakh rupees, why do you chumma keep here? You go and put in share market. Go. I'm giving the money back. So, I've used this money from 1 April to 30 March. 10 lakh money returned on 30 March. X did not know anything because he came from science background. This is not studied from Prathik sir also. He does not know all this. So now, on 31st March, what is the capital of X in the business? 0. 31.3 is the closing balance. So this 0 is closing capital. So if I go with the concept of closing capital, IOC to be calculated on the closing capital. So 0 into 10% is how much? 0. X will not get any IOC. And how smart I am? On 1 April, I made a wrong calculation. I need a lot of money. Please give me the 10 lakh rupees back. And look at the smartness. 30 March evening, I'm giving the money. 30 March is Friday. Share market Saturday, Sunday closed. 2nd April, when the share market is opening, one day before that, 1 April, Sunday itself, I'm asking you the money back. 30 March is Friday. Saturday, Sunday share market close. That is 31 and 1 share market close. When will you invest the money? 2nd April, which is on Monday. So Sunday itself, I'm calling you, Macha, I need money, Macha. What did I give you? No, give it back. Now on 1 April, you got the money back. But on 31st March, the capital is 0. So technically, you've enjoyed the money for 364 days. Had I told you to calculate the interest on capital on the closing capital, everybody will do like this, no, boss. Which means that owner will never get his interest. The law said very clearly, pay the interest on the amount that you are enjoying. Which is not about only the opening capital. It's not just the opening capital. Here, I've enjoyed this money for 364 days. The firm has enjoyed this money for 364 days. So I have to pay the interest for the 364 days. So now, 10 lakh into 10 by 100. This will give me the interest for 365 days. Multiply by 364 by 365. You get the interest for 364 days. So technically, this 10 lakh is what? Opening capital. So always the interest is calculated on the opening capital and the additional capital. Any problem?
No, sir.
Now, 1 April, 31st March, 110. Opening capital, 10 lakh. Additional capital, 5 lakh. Please tell me, how will you calculate IOC at the rate of 10%? IOC 10%. How will you calculate the interest on capital?
The 10 lakh for entire year and 5 lakh for half.
I knew you will do this. What you're saying is right. But when the drawing against capital comes into picture, no, it will be a disaster. I told you always very clear in my class that whenever you have a scenario like that, please calculate the interest event to event. What you said, so this 10 lakh has been used by the business for the entire year. So 10 lakh into 10 by 100. And this 5 lakh is used for 6 months. 5 lakh into 10% to 6 by 12. No problem. In this scenario, no problem. The problem comes when there's drawing against capital. That time, what will you do? Then on the drawing against capital, you have to calculate the interest on capital, minus it from the entire interest on capital. If you forget to minus, no, gone. That is why I don't suggest that method. So what I suggest here, you calculate the capital amount from one event to another event. From one event to another event. So from this event to this event, how much capital was enjoyed for how many months?
10 lakh for 6 months.
10 lakh for 6 months. Correct? From 1st October to 31st March, how much money was enjoyed? 15 lakh for next 6 months. How much money totally you enjoyed? For 12 months. Correct? So now, 10 lakh into 10 by 100 into 6 by 12. I'll get the interest for the first 6 months. I'll get the interest for first 6 months. Then 15 lakh into 10 by 100 into 6 by 12 for the next 6 months. You'll get the interest answer. Any problem? What you did also is correct. In the case of opening capital, additional capital, you can do that. But when drawing against capital comes, please don't do that. So what is the OR option? What is the OR option? The OR option is that this 10 lakh has been used by the business. The 10 lakh rupees is used by the business throughout 12 months. Correct? Opening capital has been used throughout 12 months. So or 10 lakh into 10 by 100 into 12 by 12. Plus this 5 lakh has been used for 6 months. So 5 lakh into 6 by 100 will give me interest for 1 year. Did I enjoy this 5 lakh for the entire year? No, you enjoyed only for 6 months because the owner is giving this money when? Only 110. No. So I received this money on 110. So October, November, December, Jan, Feb, March. 6 months I enjoyed the money as a firm. I'll pay the interest only for 6 months. So into 6 by 12.
Sir, into 10 by 100.
Sorry, 10 by 100 into 6 by 12. Second option is right. You can do it, no problem. But the problem comes when when you have a drawing against capital item. You don't believe me? We'll do it here. Same question, different twist. Opening capital on 1/4, 10 lakh. On 1 July, additional capital, 5 lakh. On 1 Jan, drawing against capital, 5 lakh. What is the meaning of drawing against capital? Drawing means what? Withdrawal of money. And the withdrawal of the money you've done from your capital. Withdrawal of the money you've done from your capital. So last class people had a doubt. So this drawing against capital is there? No. On this, should I calculate the interest on drawing? The answer is no. Because whatever the money you're withdrawing, no. This money you're adjusting in the calculation of IOC itself. So drawing against capital is an item to be adjusted under IOC. Interest on drawing is calculated on drawing against profit. The logic of that we discussed in regular class. Here I'm refraining from discussing the logic. But be very clear, drawing against capital is an amount which will be taken into consideration while calculating your interest on capital. Whereas drawing against profit is an amount to be taken into consideration for the purpose of calculating interest on drawing. Any problem?
No,
Now, all those people who said that, sir, I'll use the method 2. This method 2, this is method 2, this is method 1. Method 1 is my method. Method 2 is your method. You apply your method 2 and show it to me in this question. You can do it. But they said procedure which is a little bit complicated. Tell me how. If I go with method 2, how do I go it? If I go with method 2, what is the interest on opening capital? 10 lakh is used for the entire year.
year.
So opening capital is equal to 10 lakh. That is interest on opening capital. 10 lakh into 10%, which is 1 lakh. Add interest on additional capital. So additional capital you've used for how many months? July, August, September, October, November, December, Jan, Feb, March. 9 months. So 5 lakh into 10% into 9 by 12. How much? Use your calculator, please. 5 lakh into 10% is 50,000. 50,000 to 9 by 12. Okay, if I make this 6 lakh, if I make this 6 lakh, $45,000. 45,000. Correct? If you say if I add these both, this is my total interest on capital, my dear friends, you are wrong. Tell why wrong. 5 lakh rupees you withdrawn. Which 5 lakh you withdrawn? Let's say out of additional capital. You have calculated here additional capital for how many months? 9 months.
9 months.
But did you enjoy this money till the 9 months? Did you enjoy this money till 31st March? No, you withdrew the money only from 1st March. So technically additional capital you enjoy for how many months? July, August, September, October, November, December. Only 6 months. For 3 months period, you did not enjoy this money. But here you have calculated the interest on additional capital for 9 months. So now I have to minus 3 months ka interest on that 5 lakh rupees so that I get the 6 months ka interest. You have calculated for 9 months. 9 months interest. If I minus 3 months interest, I'll get 6 months interest.
6 months.
Method 2, what are they supposed to do? Less interest on drawing against capital, which is how much?
5
lakh into 10% into
3 by
3 by
12.
12. And whatever answer you get, you have to minus that. You have to minus this. And then the final IOC will get it. How much it is? Please tell me. 5 lakh into 10%. We changed to 6 lakh, no? Sorry. Let's say drawing against capital also is 6 lakhs. We'll change it to 6 lakh for convenient purpose. 6 lakhs. 15,000. So from 45,000 interest of 9 months, if I minus 15,000 interest of 3 months, I'll get 30,000 rupees interest of
6 months.
6 months. So these both put together, 30,000 rupees is interest for 6 months. Correct? So how much is my total interest now? 1 lakh 30,000 interest. If you're able to do this, if you're able to understand this concept and do this, then do this method. I have no problem. If you feel that, sir, I'll forget to minus the interest on drawing against capital. Because for the capital that I've withdrawn, when the money is not being enjoyed by the firm, why will firm pay the interest on that 6 lakhs? Boss, why is firm paying interest on capital? Because firm enjoyed your money. So they're compensating you for enjoying that money. Now here the 6 lakh rupees is withdrawn in the last 3 months. Why will the company or the firm pay that interest on that 6 lakh? So we are minusing that interest which you have already calculated. Or you can do my method. What is my method? You have to do the calculation from event to event, from one event to another event. From this event to this event, one calculation. From this event to this event, another calculation. From this event to this event, another calculation. Please tell me, from this event to this event, how much money is enjoyed for how many months?
10 lakh for 4 months.
10 lakh. So here 1 July means April, May, June, not July. 4 months, like 3 months.
3 months.
10 lakh for 3 months. 1st July you have introduced the capital, which means 10 lakh is used till 30 June only. So April, May, June. So 10 lakh the firm is enjoyed for 3 months. Then now the capital has become how much? Plus 6 lakh more, 16 lakh. So 16 lakh here is enjoyed for how many months? 16 lakh here enjoyed for how many months? So July, August, September, October, November, December. For 6 months.
6 months.
Then 6 lakh withdrawn from 16 lakh from minus 6 lakh. What is the remaining capital?
10 lakh.
10 lakh. Correct? No? Opening capital plus additional capital minus draw against capital. Correct? No? With opening capital, if I add additional capital, add only, no? Draw against capital, I have to minus. From 16 lakh, if I minus 6 lakh, so what is my remaining capital on 1 Jan? 10 lakh.
10 lakh.
Use that for how many months?
3 months.
3 months. So 3 months plus 6 months plus 3 months is equal to 12 months?
Yes, sir.
So what is the calculation now? So 10 lakh into 10 by 100 into 3 by 12 plus 16 lakh into 10 by 100 into 6 by 12. Then 10 lakh into 10 by 100 into 3 by 12. You will get one interest which is 1,30,000 rupees. If you want, you can calculate and see. If you want, you can calculate this and see. So either you can do event to event or you can do like this also. Both are acceptable. Whichever you are comfortable, you can follow. Easy or difficult?
Easy, sir.
This calculation is no different from what you've done in cash flow statement. Boss, interest on drawing. Sorry, not interest on drawing. Interest on debentures. Interest on borrowing. Preference dividend calculation. All this is based on the similar model. All these are in similar lines. So in the context of IOC, I discussed with all of you the calculation of IOC. Then I discussed with all of you the accounting treatment of IOC. What are we yet to discuss?
Calculation of opening capital.
Calculation of opening capital. Now in this question, like halwa, we gave you what? Like halwa, we gave you opening capital. Like halwa, we gave you additional capital. Draw against capital. Everything is given to you. Directly you multiplied the percentage on that respective amount. You got the interest. But now what they will do? No. They will complicate the question. How? They will not give you opening capital. Instead, they'll give you closing capital. They'll give you closing capital. Now, how will you do this? Is there any one question that we can do based on this? Which question? Which question can we do? $20? 25. An Mohan is your next level. Before that, we'll do some easy questions. 22. 22 question. With this, we'll understand. Before that, I'll do one simple question of my own. Now, there are two methods of maintaining capital. One is
Fixed method.
capital method. Second is
Fluctuating.
fluctuating capital method. In which of this method I have to maintain two accounts?
Fixed
Fixed
capital.
method.
Think and answer.
Fixed.
Fixed
sir.
two accounts or fluctuating two accounts?
Fixed.
Fixed two accounts. One is
Capital account.
Capital account.
very good. One is capital account. Second is
Current
Current
account.
in FLCM only capital.
Capital.
Now please tell me, in fixed capital method, in which of these two account the additional capital will come into picture?
Capital account.
Capital account.
Which of these two ledger, capital ledger and current account ledger, where the additional capital will come? Capital ledger.
Account.
Where will the drawing against capital come?
Capital ledger.
Capital account.
Capital ledger. And these two information are important for me to calculate IOC.
Interest.
IOC. Opening capital is given where? In capital account. Closing capital is given where? In the capital.
Account.
For me to calculate IOC, I need opening capital, additional capital, drawing against capital. All this three information is there where in the FCA method? Capital account. So can I say for the purpose of calculating IOC under fixed capital method, the only ledger which is relevant to me is capital account. All of you know what is the content of the capital account? What is the maximum content of the capital account? So it begins with opening capital. By balance brought down. Opening capital. Let's suppose 10 lakh rupees. Okay. Further capital contributed in form of cash. Entry, please. Cash to capital. Capital account by cash. Is the capital supposed to be contributed only in cash?
No, sir.
It can also be in form of
Assets.
Let's say 5 lakh rupees. So what is the total capital of the business?
15 lakh.
15 lakh. In that you have withdrawn 5 lakh rupees. So what is entry?
Capital account to cash.
Possible. One is capital to cash. Direct entry. Or you can infuse in between drawings entry. So what is, in that case, two entries will come. Drawings to cash and then capital to drawing. So either to cash or to drawing against capital. So this entry we discussed in the last class.
Yes, sir.
From beginning also we've been discussing. Any doubts here?
No, sir.
Or let me make this
So
2 lakh. What is my balance carried on? What is my balance carried on?
13 lakh.
13 lakh rupees. And this balance carried on, if I call it as closing capital, do you have any objection?
No, sir.
No, sir.
No. Now, one question is direct question. Means what? They'll give you opening capital, additional capital, drawing against capital directly in the question. No problem. This is level 1 question. Everything is directly given. Now, level 2 question, where they will not give you opening capital. You have to calculate this as the final answer. As opening capital to calculate. How will you do it? For that, you will be given closing capital, drawing against capital, and additional capital. How will you do it? In ledger format, very simple. You have to do the normal balancing. Which side total is more here in this case?
Debit side.
Debit side total is more. How much? 15 lakh. Minus 5 lakh. So what is the balancing figure here?
10 lakh.
In ledger, it is very easy to calculate. But in exam, what they expect? They don't expect the ledger presentation. They expect the tabular column presentation. So in the tabular column presentation, how do I calculate my opening capital? Calculation of opening capital under which method?
Fixed
Under
capital method.
Fixed capital method. So now, to calculate opening capital, what is my base?
Closing
to calculate
capital.
opening capital, what is the base?
Closing capital.
To calculate closing capital, what did you take as base earlier? Opening capital. You took opening capital as a base, 10 lakh. With that, you added additional capital. You subtracted additional capital to get the closing capital. Correct? Now, we are doing the reverse calculation. You remember the reverse calculation we studied somewhere recently?
Yes, sir. Cash flow.
To get the surplus, what do? Net profit before tax and extraordinary item. Do the adjustments for the extraordinary item, minus provision for tax, minus transfer to reserve, minus
Dividend.
Minus preference dividend, minus equity dividend. Then you get surplus. When you go in reverse, you take surplus as a base. What and all you added earlier, now you have to
Minus.
And what and all you subtract earlier, you have to
Add back.
the same way, guys. Think and tell me, to get the closing capital, you took opening capital as a base. With that, you added additional capital, subtracted drawing capital, and you got
Closing capital.
Closing capital. Exactly like surplus, no?
Yes, sir.
Now, when I go reverse with the closing capital, what and all you subtract earlier, now I have to
Add.
back. And what I added, I have to subtract to get the net profit before tax and extraordinary item, which is opening capital here. Same strategy here. So now please tell me, under fixed capital method, to get opening capital, what is my formula? Closing capital With the closing capital, what did you earlier deduct?
Drawing against capital.
Debit side
Drawings.
minus in the capital. Debit side is minus. Credit side is plus.
Plus
What did you minus here in the debit side, boss?
drawing against
Drawing against capital. To reverse, I am supposed to add now. Add back.
add back
Add drawing against capital. How much is closing capital?
13 lakh.
13 lakhs. How much is drawing against capital to be added reversed?
2 lakh.
2 lakh. And to get this 13 lakh rupees, what did you minus from the opening capital? Sorry, what did you add it to the opening capital?
Additional capital.
To added 5 lakh to the opening capital. Now to reverse, we have to minus 5 lakhs. So minus additional capital 5 lakh. So what will I get now?
10 lakh.
10 lakh rupees as my
Opening capital.
opening capital. Any difficulty?
No, sir.
Sir.
Now they'll give you current account also in this. Okay, they'll give you share of profit, drawing against profit. Will you all adjust here?
No, sir.
Sir, in fixed capital method, I only prepare capital account, and so I prepare both capital and current account. But for the purpose of calculating IOC, what do I need? Opening capital, additional capital, drawing against capital. All these three specimens are there in the capital account. And what information you are telling, which is share of profit, share of loss, drawing against profit, all these comes where? In the current account. To calculate this closing capital, did you take the help of share of profit? Did you
No,
adjust
sir.
share of loss? Did you adjust IOD? No. So therefore, while doing the reverse calculation, I will not consider any of those items of the current account under fixed capital method. Tell me, okay or not okay?
Okay, sir.
Okay. One more twist I'll do here. Now tell me, what is your final answer? Opening capital, we have to find out, okay? The question says that the closing capital is calculated after considering the additional capital, but without considering the drawing against capital. One more time. Opening capital, you have to find out. Additional capital, 5 lakh. Drawing against capital, 2 lakh.
2 lakh.
There is a note in the question says that the closing capital is derived only considering the additional capital. The closing capital is derived only considering the additional capital. Okay. Now tell me, what is the formula?
Closing capital minus additional capital.
What about drawing against capital?
We didn't include it while calculating
Those who
closing.
didn't understand, I'll tell you one more time. Question. Calculate opening capital. Online people, you said rightly answer. I'm just repeating for those people who did not understand. Calculate opening capital. In the question, they're telling that closing capital, 15 lakh. Drawing against capital, 2 lakh. Additional capital, 5 lakh. There's a note, or here it is written, after considering only additional capital. That is, closing capital has been calculated only after considering the additional capital, which means to calculate this closing capital, what is not considered? Drawing against capital is not considered, which means this drawing against capital is never debited in your capital account.
Capital account.
It's credited in your capital account. Only additional capital. How much?
5 lakh.
5 lakh. And thereafter you got the closing capital 10 lakh. Now when I do the reverse calculation, with the closing capital, will I add back the drawing against capital?
No, sir.
Because to get this closing capital, I never debited drawing against capital. So while reversing it, why should I add back? To get this closing capital, you never debited or deducted drawing against capital from the opening capital. With the opening capital, did you ever minus the drawing against capital to get this 10 lakh rupees? No. So when I'm doing the reverse calculation, why do you think I should add back the drawing against capital? So I will not add back. So what will I add back here only? Sorry, what will I minus here only?
Additional capital.
Additional capital. To get this closing capital, what and all were added earlier, that will minus. And what and all were minus, we are supposed to add back. To get this 10 lakh rupees with opening capital, what and all you credited, that is added. What and all you debited, that is subtracted. Only those items now I will reverse. To get this 10 lakh rupees, if I did not consider the drawing against capital, then while reversing also, I will not consider the drawing against capital. Have you got this logic?
Yes, sir.
Yes,
So
sir.
here, my formula for opening capital will be closing capital, no add drawing, directly minus additional capital 5 lakh. So what is my opening capital now?
5 lakh.
10 lakh. No, closing is
5 lakh.
15 lakh is closing capital minus 5 lakh cash additional capital. So opening capital is
10 lakh.
So closing capital 15 lakh. Add drawing against capital 0. Why? Because sir, drawing is there, but why 0? To get this 15 lakh, did you minus 2 lakh there? No. So while reversing, I will not consider. Less additional capital minus 5 lakh. So opening capital is 10 lakh. Which means the game is very simple. To calculate this closing capital, which at all item were added and subtracted, that only I will reverse. Am I loud and clear? Online people, am I
Yes,
loud?
sir.
Yes, sir.
Now you're supposed to calculate. Now you're supposed to calculate the opening capital under fluctuating capital method. Under fluctuating capital method. Okay. In fluctuating capital method, what are the items that will come on the credit side? So buy, balance, brought down, which is opening capital. Do you agree with me? 10
Yes,
lakh.
sir.
Buy, salary, remuneration, commission, 5 lakh. Buy additional capital, cash, additional capital, 5 lakh. Buy P&L appropriation account, interest on capital, forget it because you have to calculate. Buy P&L appropriation, share of profit, 5 lakh. So what is my total? What is the total?
25 lakh.
25 lakh. Now, in that we have withdrawn by cash, drawing against capital. How much? 1 lakh. Then by cash, drawing against profit. The profit you're withdrawing in advance. Let me make it 2 lakh. 2 lakhs. By interest on drawing, 3 lakhs. Please tell me, what is my closing capital? Buy, balance, carry down. How much?
19 lakh.
19 lakh is my closing balance. Any problem?
No, sir.
Now, they'll give you all this information except
Opening capital.
capital. Now, you're supposed to calculate the opening capital. What will you do? What is the formula here now? Will you sit and buy the format?
No, sir.
If you sit and buy the format, till where will you buy the format? There's no end to it. So, batting format is not the solution. You have to remember to get the closing capital. How did you get the closing capital? So, with opening capital, we added all this and we subtracted all this to get the closing capital. Do you agree?
Yes, sir.
To get this closing capital, what and all items you added earlier, now you have to
Subtract.
To get this closing capital, what and all item you subtracted, now you have to add back.
Add back.
Don't add the format. Understand what has happened. How did you get this closing capital? Think about it. So this closing capital has come after crediting salary, remuneration, commission, after crediting additional capital, after crediting share of profit. So when I'm reversing it, I have to minus it. Credit means what? Add. Capital is credit balance. To increase profit, to increase capital credit, you have credited by increasing it. So to reverse, I have to minus. And whatever item you have debited is minus. Now you have to reverse it by
Adding back.
So now please tell me, in this scenario, what is the formula for calculating the opening capital? Sir, closing capital how much? 19 lakh. To get this 19 lakh, we had deducted these three amounts from your opening capital. Hello. These three you're deducting from where? Opening capital, na? These three are adding to what?
Opening capital.
So these three were deducted from opening capital. While reversing, we have to add back these three items. So add interest on drawing how much?
3 lakh.
3 lakh. Add drawing against profit how much?
2 lakh.
2 lakh. Add drawing against capital how much?
1 lakh.
1 lakh. 3 minus item reversed by adding. How many plus items? 3 plus item now reversed by subtracting. So minus share of profit how much? 5 lakh. Minus salary, commission, remuneration
5 lakh.
5 lakh. And then minus additional capital 5 lakh. So now what do you get? Will be 10 lakh rupees as the opening capital. Are you able to follow?
Yes, sir.
Always remember, with the closing capital, you will add and minus only those items which were considered in the ledger, which were earlier considered in the ledger, or which were added and separated earlier with the opening capital. While reversing it, you will reconsider only those items. Imagine you get a question where the share of profit is 5 lakh, okay, but that share of profit is not yet credited to your capital account. Now I'm just twisting the question, okay? Listen to very carefully. 19 lakh rupees closing capital. The question says that share of profit is 5 lakh, yet to be credited to capital account. Okay. Now tell me, what is the formula to calculate the opening capital? Closing capital, add interest on drawing, add drawing against profit, add drawing against capital, minus salary, minus additional capital. You will not minus the share of profit because the share of profit was never added earlier in the capital account. So while reversing it will never subtracted. Any problem?
No, sir.
No, sir.
No, sir.
Now, the moment you get opening capital, people, the moment you get opening capital, no, do your calculations properly. Now, some people get confused. Sir, opening capital we calculated, we got it. How to calculate the interest on capital? Simple. For me to calculate interest on capital, how many people I need? 3. One is opening capital. Second is additional capital. Third is drawing
against capital.
Once you get the opening capital through this is just a mechanism to calculate the opening capital. Once you get the opening capital, take this 3 information outside and you know how to calculate IOC. Once you get this 3 information, take this information separately. I taught you the different methods to calculate the interest on capital. Either method 1 or method 2. Using this, you calculate, boss. So now the format is there, no? Add and minus. That is only for the purpose of calculating your opening capital. Calculation of opening capital under fixed capital method. When the capitals are fixed. Closing capital, add drawing against capital, less additional capital. If it is fluctuating capital method, how do you calculate the opening capital? Closing capital, they've given only 4 items on debit side, add. And they've given 4 items to be subtracted. My question goes to all of you. Imagine in the credit side, they put by reval account 5 lakh rupees. So will you not minus this reval account profit? What? No. This 5 lakh rupees is credited to capital account, which means this is added to your opening capital. With the opening capital of 10 lakh, you added this 5 lakh to get this closing capital. So while reversing it, will you not minus the reval account? You will minus. But my question is, where have they put in minus reval here? Since minus reval is not given in this format, what will you think? Oh, reval I should not minus. This is the problem when you by-heart the format. If you know the concept, you know what needs to be done. Sir, the concept is very simple. To get the closing capital, with the opening capital, what and all you credited and what and all you debited, those items you have to reverse to get the opening capital. With the opening capital, you added something, debited something, minus something to get the closing capital. No? Opening capital plus credit items minus debit items to get closing capital. Now, I need opening capital. I'll take this to other side. So what is my formula now? Closing capital. This minus debit side will go to that side, becomes plus debit side item. And minus credit side, plus credit side item, when it goes to other side, becomes minus credit side item. So what are the debit side item to be added? Drawing against capital, drawing against profit, interest on drawing, share of loss. What I have to minus? Addition capital, salary, interest on capital, share of profit. So in this format, they've given only 4 debit and 4 credit. But as you progress in the entire partnership chapter, when you come to your admission, retirement, death and dissolution, there you have so many other items to be created and debited. So if I get one question where the revaluation profit is added in the current year, and now I want the opening capital, so will you not minus the revaluation profit? You will minus. As a part of your adjustment, you credit your general reserve profit. Yes or no? By
Yes.
GR, you credit or not? So for calculating opening capital, will I not minus the GR part? You have to minus. If GR is credited earlier, added earlier, to reverse I have to minus also. So people who are by-hatting the format, be ready to screw yourself. Any problem? So all this data of addition and subtraction is coming from where? It's coming from your capital account. Add part is nothing but debit side of the capital ledger. And all the less items are nothing but the credit side of the capital ledger. So see in the debit side and credit side, what have they considered and what have they not considered. Whatever they have considered for calculating the closing capital, the same items you have to reconsider for reverse calculating the opening capital. If any item given in the question but not considered by the question for the purpose of calculating the closing capital, those items you will also not reconsider for calculating the opening capital. Simple thing for getting closing capital. With opening, what and all was added, you will minus now. And whatever was subtracted, now you will add back. That's all. As simple as anything. It's 2 p.m. now. Interest on capital related concept we have discussed. Technically speaking, calculation part discussed, opening capital calculation also discussed, and accounting treatment also discussed. But I don't want to do the questions. I want to do some questions. There are few questions which is very tricky. There are few questions where they do the calculation of into 10 by 110 and all in the calculation of the opening capital. Right? So I will do it in the next class. But all the questions which is pertaining to IOC, illustrations, book back exercise, can a question. My humble request is try out and come. In that somewhere you'll get stuck somewhere. That question I'll do. For example, you said that 25th question, no? And what was that? Ann and Mohan. This I'll do it in the next class, no doubt, because this is the tricky of the tricky question. So this I'll take care of in the next class. Apart from that, if there is anything else, you have to let me know, because I have to spend time on that part also. So next class, maybe 1 hour we'll spend on the IOC. In the second half, we'll deal with IOD. And maybe on Wednesday, we'll be done with the managers. No, what is that? Past adjustment and minimum guarantee. So Friday, we should be doing some extra questions. If you bring it to my notice, I'll do those questions and wind up with the topic. If not, then Friday I'll start with the goodwill topic. Any problem?
No,
Can
sir.
we wind up?
Yes, sir.
That's all from my side, people. I'll see you in the next class, which is tomorrow. Tomorrow, 6:30 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.